how do you go about, appealing to this person who their savings, their investments in a sense, and even their earnings are all in local currency? Is it damning when you find yourself, you have no USD income yet, you need to make an investment in USD, meaning you have to make a lot of those conversions, maybe save quite a lot in Kenya shillings first, and then liquidate it and keep it as USD?
It's a misconception in a way, and we'll break it down. Looking at it historically, the interaction with foreign currency was not as regular as it is today. The number of dollar products were not as many. So online transactions, for example, were unheard of. But now you can make transactions as small as less than $1. It's highly likely that you're going to interact with dollars more frequently going forward than you used to in the past. That mindset needs to change. To just think that, I will always transact in Kenyan shillings.
So hi, welcome to another episode of Make Money the podcast. 2023 presented the best case scenario for investing in foreign currency as we saw our local currency, the shilling, tumble against major world currencies. But 2024 has been a cautionary tale that what sometimes goes up can always come down. And we've seen the shilling gain by nearly 20% against the US dollar. And so that leaves the dilemma on whether we should still be investing in foreign currency or dollars in a sense. And to have this conversation and to tackle this dilemma, I'm happy to have Cliff Bakashaba, Senior Portfolio Manager at Jubilee Asset Management Limited. So welcome to the podcast, Mr. Cliff.
Thank you. Thank you for having me on today's podcast.
Yes.
My name is Cliff Bakashaba.
Yeah.
I'm the Senior Portfolio Manager at Jubilee Asset Management. Jubilee Asset Management is a wholly owned subsidiary of Jubilee Holdings Limited. Jubilee Asset Management is regulated by the Capital Markets Authority as a fund manager. And we offer an array of products, both to the institutional investors as well as the retail investors.
Great.
Yeah,
and great introduction to yourself right there. Coming back now to the conversation here. Interesting, I bought some dollars at 155 shillings around February, right before the turn happened. And so you can tell where I sit at the moment, when you're at around 129, 130.
Yes.
And so many others might have done the same. I think there was this wave of speculation on where, our local currency could go. There was talk of 200, there was talk of 180. But what we saw is a complete reversal of it. And so the question then becomes, does investing in foreign currency or in USD remains as compelling, noting again the turns we've seen over the past year?
Yeah. So you used an interesting word there. Speculation.
Yeah.
And, people invest in foreign currency for a number of reasons. One of the reasons being speculation. And what happened in most of 2023, there was a lot of speculation around where the Kenyan shilling would fall against the US dollar. And the key driver of that was, as you're aware, the maturity of the 2024 Eurobond of about $2 billion. Yeah. So there was a lot of speculation about whether Kenya would be able to make that payment, make good on the payment, or whether Kenya would default. So a number of individuals took a position against the Kenyan shilling, thinking that it would rise beyond the 155 to the 160, all the way to 200. There are people who had views that it would go to 200. Yeah. But all that is speculative in a way. But from where I sit, I prefer to look at it differently. Yeah. And the question is, why are you investing in dollars? Yeah. The number of other reasons why people invest in dollars. One of them, or one of the main reasons that drive that investment, is diversification, right? Many of us have our investments seated in the local currency. So this could be in the form of, land. It could be in the form of fixed deposits with banks. So investing now in the US dollar presents an opportunity to diversify some of your investments, such that in the event anything happens to the local currency, you have this alternative, which is the US dollar. And it's viewed globally as a safe haven, if I may call it that. Yeah. So a key driver other than speculation as to why people should still invest in US dollars is diversification. But over and above that, there are other reasons. There are expenses that you will likely have to incur at some point in time in future in US dollars. So at a certain point X, you'll probably plan a trip. It could be, you might take a flight, for example, out of the country. It might be tuition, for university abroad. You might be shopping online. There's a lot of shopping happening online. All that now is being done in US dollars. So it's important now to create a portfolio of US dollars that is earning a return to sort of cover those expenses as and when they arise.
Yeah. And in a sense, we are still seeing the demand for the products, even as I talked about the gain in the year so far.
Yes.
Yourselves as Jubilee Asset Managers recently launched, a USD product. I've seen some of your competitors, I might not mention them here by name, but in a sense, we are still seeing that demand. And for sure, fund managers like yourself must be responding to something launching the same products.
Yes.
So is it still, I like you mentioned diversification, so that it's not whether the shilling tomorrow we wake up at 150 or back at 120.
Yes.
It's more about diversification. Does that then become the underpinning factor for investing, or the best way to go? Because again, speculation, you could re-burn your fingers sometimes with that.
True. So we launched our US dollar money market fund in June of 2024. It's been a fast-growing product. We've seen a lot of uptake. And the key driver for this growth is multifaceted. So one, there's been increased awareness in the market about how money market funds work. You'll be shocked, but the awareness in the market is still really, really low compared to, say, awareness about, for example, banking products. And it took some time before people understood or before people were comfortable with placing their money, say, in a current account or a saving account. So as it currently stands, we have about 1.2 million accounts within the collective investment scheme industry, compared to banking accounts that are in excess of, I think, over 70 million across Kenya. So it shows the disparity, but of course the banking industry has been here for so many years. But with increased awareness, we are seeing a tremendous growth in the assets managed by fund managers within the collective investment schemes. So a key driver of the growth has been awareness. People are learning more about how a money market fund works, or how a unit trust works. People are starting to realize that this is a regulated product. So the level of safety is relatively high. People are starting to understand, the return opportunities presented by these products, the risks attached to these products. But over and above that, people are starting to appreciate the importance of diversifying, especially after what happened last year. It became apparent that, you could lose 20% of the value of your money in such a short period of time. So people are starting to realize, what, let me not put all my eggs in one basket. Let me have, this wallet that has my investments in Kenyan shillings, but also have a separate wallet that has some investments in US dollars. And, the return grows over time. People only look at the return in terms of the interest that is offered. But the fact that, as the currency depreciates, you also stand to make gains. Part of why people were speculating on the currency. So there are a number of ways you can make a return on the US dollar, in addition to the diversification benefits. Now,
there are a bit of, I don't know, they call them myths or misconceptions around investing in foreign currency. And I would like to read them out to you, and then we can always tackle each. So I think the first one is, a lot of people think I must be earning in dollars for me to invest in dollars. So they are quite, it's a shilling salary. I mean, most of our salaries, we are not quite the dollarized economy, say, unlike Zimbabwe and the likes.
Yes.
How do you go about, appealing to this person who their savings, their investments in a sense, and even their earnings are all in local currency.
Yeah.
How do they go about? Is it damning when you find yourself, you have no USD income yet, you need to make an investment in USD, meaning you have to make a lot of those conversions, maybe save quite a lot in Kenya shillings first, and then liquidate it and keep it as USD.
Yeah.
How would you respond to someone wondering, and in shillings, not a lot of them for that matter, and here you are trying to get me to diversify my investment? How do we go about that?
So you mentioned something interesting. It's a misconception in a way, and we'll break it down.
Yeah.
From looking at it historically, the interaction with foreign currency was not as frequent or as regular as it is today. So, the number of, say, forex bureaus were not as many. The number of dollar products were not as many. And, online transactions, for example, were unheard of. Yeah. So possibly the only time you would interact with dollars would be, say, you're traveling abroad. You go to a forex bureau, you change your Kenyan shillings for dollars, you pay to the travel agent, and that's your last interaction with dollars. But now we are living in sort of a decentralized age, whereby the frequency of transactions has increased. You can make transactions as small as less than $1. Using just your card or using your mobile phone. So there's a lot of advancement in technology, and that has increased the velocity of transactions, and therefore it's highly likely that you're going to interact with dollars more frequently going forward than you used to in the past. So that mindset needs to change, to just think that I will always transact in Kenyan shillings. And we are now a global economy. You can do business with someone in China. You can do business with someone in Europe, someone in US. We are not just doing business, within the country. So with global trade growing, we are looking at more trade happening across Africa, more trade happening across the globe. There will be a lot of interaction with US dollars. So then the question is, so now how do you plan for this economy that is using a currency that is different from your traditional currency or your local currency, right?
Yeah.
So you need to start thinking beyond just the local currency, now you need to start having a pool of dollars. If you're saying trade, you need to plan for your dollar needs, for example, and it could be any other currency. So now let's say you anticipate that over the next 5 or 10 years, you're going to need $100,000 or $200,000, right?
Yeah.
Maybe for education, for trade, for many different needs that maybe you didn't have many years ago. So now, question is, where are you going to get these $200,000 or $500,000 or even $1,000, for example, right? So then it means you need to start saving in that currency, which is, if you think about the local currency, that's how we also start, When you leave school, you start now saving for your needs.
Yeah.
Be it, rent, be it whatever aspirations you might have.
Yeah.
You start saving for these needs. And I think the mindset needs to also change towards that direction when you start thinking about things like US dollars. So we need to start saving for those future needs that we'll have at some point. And not just save, but also earn a return on this saving. And that's where now a product like a money market fund comes in, because it pays you an interest on this savings. So as opposed to having your money, say, lying idle, it could be on a current account, earning 0% or whatever low rate of return. Why not put it in an account or a vehicle that will earn you interest? And it might not be much, it could be 5%, 6%, but over time, that actually grows and accumulates. So you find, as opposed to getting $10,000 out of your pocket, you will find that you only get maybe $8,000 out of your pocket, and the $2,000 could be interest that you have earned over time. So that is also a saving in a way.
Yeah. I think the second myth or misconception is around I have to be rich to invest in dollars. We know where the exchange rate stands, so we know we need around 130 shillings for every dollar you have to hold.
Yes.
So for someone feeling I can only save 5,000 or save and invest 5,000 shillings a month,
yes,
I get the need to diversify my portfolio.
Yes.
In a sense, spread out. Have a bit of shilling investments if my needs are mostly in shillings, but always anticipate the need for dollars.
Yeah.
How do you respond to someone feeling then maybe it might be too much to ask? Maybe the dollar investment is sitting on a pedestal in a sense.
Yeah.
How do I still diversify even when I feel maybe my income is not as high as I would like it to be?
No, once again, times have changed.
Yeah.
And back then, when these products were not available, say, the Jubilee USD money market fund, if I wanted to invest in a dollar investment directly, I needed to have a significant amount of money, right? Say I want to open a bank account in the US. The requirements are so stringent that it will not be possible for me to open that bank account, right? Secondly, even if I open the bank account and I want to make, a certain purchase, there will be a number of requirements in place before I can actually make that investment. So then those were one of the reasons that drove us to now coming up with such products. So, for example, with the Jubilee USD Money Market Fund, we started off with a minimum investment amount of $1,000.
Yeah.
So that's approximately about 130,000 Kenya shillings. I mean, if you think of the most popular investment in Kenya, probably being land, with 130,000 shillings, there are very few places
you would struggle to find. Quite in the remote
you really have to
get
go
anything
exactly
close to that amount. Yeah,
exactly. But here, with 130,000 Kenyan shillings, once converted into dollars, that's approximately $1,000. You can start earning a return in dollars, and you can top up with an amount as low as $500, right? So $500, we are looking at about less than 70,000, right? Less than 70,000 Kenya shillings, and therefore, we are working on even how to see how we can bring that amount even to as low as even $100, to be able to just put 100 aside every month. Over time, that money will grow. So you don't need to have a huge sum of money. You don't need, I don't know, 100,000 or $1 million to be able to invest in US dollars. Things have been decentralized. Now you can access these opportunities with much lower investment amounts. And the advantage here is if I had this $1,000 as an individual and I said, let me invest on my own, chances are I will make one investment, right? If I can even find that opportunity. However, when I invest through a money market fund, such as the Jubilee USD Money Market Fund, it gives me an opportunity to invest alongside other investors. So we are a pool of, say, 100, 200, 1,000 investors that have all contributed $1,000. That has grown to, say, over $1 million. And now, as the fund manager, we can go out and look for different opportunities, right? Once again, you get the benefit of diversification. But if you go as an individual and invest that $1,000, you are stuck maybe in one investment. So God forbid, if anything is to happen, your entire amount is at risk. But in this case where you have come together with other investors, we have put your money across different opportunities. Could be, we invested with banks in fixed deposits, offshore investments in the US, different opportunities. So there's that benefit of diversification. But also, as an investor, it saves you on time, right? The headache of having to analyze and think about, is this safe? Is this not safe? How do I invest? Who do I invest through? Doing all that work, you would rather focus on what you do best, which is basically earning your money in whatever form. Could be business, could be employment. Then let a professional manager focus on managing your investments, right?
Yeah.
So that is the convenience that we are bringing to the market, to try and make it easy for people to access these opportunities with very low investment amounts, but also the flexibility, the ability to, you can invest today, 2 days you can come and say, I want my money, and it will be made available. So there's the convenience as well as the flexibility that comes into play.
Yeah. I think now coming back to the environment we're operating in, and we know where interest rates are headed. I think the US Federal Reserve has begun this rate cutting cycle.
Yes.
And so the prospect of certain USD investments, more so fixed income in the US, might be coming down in terms of the rate of return you get.
Yes.
So there's always that prospect of an even stronger shilling than we've even seen so far this year, and perhaps a weaker dollar. I wonder how someone should be interpreting these movements. They might be short term or last on year for a short period of time. But is this something to consider, where perhaps your base currency is moving to? Is it something to consider, or do you just invest and, just have that benefit of diversification without worrying too much about the cyclical movements in rates?
Yeah, so I mean, it's something you definitely have to consider. Interest rates are a major determinant of basically so many things in the economy, right? One of them, being movements in the currency. And the expectation here is one, like you said, the US Federal Reserve cut the Fed rate. And the expectation here is the lower the interest rate globally, we are likely to see now international investors prefer more of investments in what we call emerging and frontier markets. Case in point being Kenya.
Yeah.
So previously, maybe I could get, 5-8% in the US, where it's viewed as a relatively safe economy. But now the rates have come down. So the question is, where am I going to get this return? So then you're likely to see some US dollars or some foreign currency flow into some of these markets, such as Kenya. But there are other determinants when it comes to movements of fluctuations of the currency, or the Kenya shilling against the dollar. A key factor to note, and this goes, historically, most economies in our region are net importers, right? So that basically means we import more than we export, right?
Yeah.
And to import, automatically, we have to give up our foreign currency in order to be able to get whatever it is we want to import.
Yeah.
A major import, say, for Kenya is fuel, right? And therefore, now we start looking at things like the prices of oil, right? So yes, interest rates might be coming down, but when there's an escalation of geo-conflict within Middle East, maybe Iran launched an attack on Israel, the oil prices start moving, right?
Yeah.
So the question is, the next importation of fuel, at what price will we be importing it at?
Yeah.
Do we have to pay more dollars? And if we have to pay more dollars, where are those dollars going to come from?
Mm-hmm.
Does it mean that we might have to give up some of our Kenya shillings, which usually now translates into some fluctuations in the currency?
Mm-hmm.
Additionally, we have a lot of borrowing in foreign currency as well. Almost close to 50% of our public debt as Kenya is in a foreign currency as well. So that means the interest we pay on this debt, the redemptions will still be in foreign currency, right?
Yeah.
So the question is, where's that foreign currency going to come from?
Mm-hmm.
So there are a number of other factors that come into play when we look at things that impact movement of the Kenya shilling.
Yeah.
So all that can cause some fluctuations beyond just what we are seeing with the interest rates,
Yeah.
Geopolitics, whatever is happening within our neighboring region has a direct impact on our currency. So there's still a strong case to look at investment in US dollars. And in this case, we are not saying, look, move 100% of your investments and put them in US dollars. No.
Yeah.
We are saying, look, start creating this pot or this buffer of dollar investments, right? I mean, if whatever direction the currency goes, you will know, look, I have these dollars.
Yeah.
At a certain point in time, when this need arises to invest in, say, or to, make an expense in dollars, I will have the money ready.
Yeah.
I will not start now, digging into my Kenya shilling pot to start converting and then making this payment. So that's how I would look at it.
Yeah. And I think you touched an important point around, we have these, I like to call them Starborn twin deficits, and you mentioned it. We have a trade deficit where we consume more from the outside than we send to the outside. Basically, we have more imports than exports that we make. And secondly, you touch around our fiscal deficit where we have to borrow and some of these needs are met externally.
Yes.
And without wanting to sound like a speculator then the long view perhaps then becomes a weaker local currency over time. Even as we have these fluctuations, we talked about geopolitical risk and how they play out in the interest rates market and also currency markets.
Yeah.
And we also spoke of interest rates, decisions made by central banks. Those then might appear as very cyclical.
Yes.
But we have this long view where we have these, I like to call them the two stubborn twins, that we're importing more than we are exporting.
Yes.
And we keep borrowing. Then does that perhaps sort of galvanize the case for, we still have faith with our economy and we are still growing, yes. But it's good to build that part. Do you feel that, in a sense, then solidifies the case point for investing?
You're spot on when it comes to that. And look, the historical trend is clear, right? I think historically, the depreciation has ranged between, I think, 9 to about 12% per annum, maybe over the last 10 years or so. And the question is, what has changed for that trend to sort of take a different turn? So in the long term, yes, in the short term, you'll have some cycles, like you've said, due to all these movements that are happening. But when you think about it long term, and this is maybe 5-10 years or so, because of the structure of our economies within the region or within Africa, the expectation is you will always have a stronger demand for dollars than, say, for local currency. So in the long term, the expectation is that historical trend will likely continue.
Great. And just to add a point, depending on which generation you're from, there are people who remember the shilling at 69 to the dollar, others at 80, others at 100. We've seen it at 160. I don't know where the next generation might see. Right now we're at around 130, so it quite shows you where we are coming from. And I think that sort of puts a cap to the conversation. So I'd like to thank you very much, Mr. Cliff, for being on the podcast this week.
Yes.
And we appreciate you, and we'll keep the conversations going to see the case where the cases exist and the opportunities.
All right.
So that has been Cliff Bakashaba, portfolio manager, senior portfolio manager for that matter at Jubilee Asset Management Limited. And that has been another episode of Make Money, the podcast. Remember to catch us nation.africa, businessdailyafrica.com, and wherever else you catch your podcast. Catch you next time.